Hello, chart watchers, and welcome to this Monday, May 20th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we're getting off to a rough start this morning, but we are off our earlier lows. Currently, the Dow Jones Industrial Average down 79 points, the S&P 500 down nearly 14, the NASDAQ down 93.5 points, and the Russell 2000 is down about 6 2/3. 10-year Treasury yield is actually up 1 basis point today to 2.40, and I have noticed that it looks like about 8 of the last 10 days, maybe more than that, we have hollow candlesticks, meaning that the yield is opening on the low and closing higher than that. So even though the Treasury prices have been going up, they're actually closing below their open, meaning the yield is rising above their open. So perhaps that is a sign that we are starting to see a little distribution in Treasuries, which could mean that we've got a double bottom in place. That doesn't get confirmed, though, until we get above that 260 level. Volatility index up about 3% today, but well off its earlier high. Continues, in my opinion, to be on a downtrend. We'll see what happens this afternoon, but so far the market is holding up fairly well after some earlier gap downs. The XLU and XLF leading to the upside today, and losers include communication services and technology. Inside of the industry groups, mobile telecommunications getting a big lift today. I'll talk about that in just a minute, but you can see the group overall challenging the late March high, trying to get a breakout, could use a strong finish this afternoon. Defense stocks have been talking a lot about this group. They continue to strengthen. They are breaking out to new highs, and you can see, even though we've had a lot of volatility in the overall market, ups and downs, the defense group continues to churn higher, and we are breaking out to a new recent high on the group. That is bullish. Semiconductors struggling again. Every time we talk trade war, semiconductors go down. There's a lot of exposure of these companies in China, and so they are getting hit each time the trade war is discussed. Here's the deal right here with the mobile telecommunications. T-Mobile and Sprint both having very strong days. The head of the Federal Communications Commission, the FCC, has said he is in favor of T-Mobile's $26 billion acquisition of Sprint. You can see Sprint really benefiting from this, up 24% today. T-Mobile also getting a big lift, dialing up almost 6% gains on the session. So both of those having very strong days. All right, Erin, it's a new week, but same jitters. Still market a little bit nervous with China and the trade war, and we're hoping, but it's kind of a rough start today.
Absolutely. It's, the market needs some shot in the arm, and certainly these trade talks are not doing that. More likely a little bit of a shot taking it to the downside.
Yeah, I think it's good to get a little bit of clarity, I guess, on this T-Mobile deal. These two companies both had been kind of mired, going sideways. I've been a pretty big fan of T-Mobile's chart for a while. There's a group, a portfolio that I put together every 90 days. I'll talk about a little bit when John Hopkins comes on from Earnings Beats. But T-Mobile was in mine the last quarter, and it's one of the companies I just felt like had some stability. I think it has held up well, even with all of the trade war talks and everything else. You can see that T-Mobile did go sideways for most of that time and is now broken out to the upside. So both these companies reacting very positively to that news. So at least in that area of the market, we're getting some good news.
Yeah, Nokia has actually upgraded today, but I'll be talking about that later.
Oh, another one in the space. Yeah, absolutely. Yes. Well, I'll tell you what, we got a lot going on. I know we've got our regular Monday setups, and Mr. Hopkins will be joining us in a bit. You've got your sentiment, so let's go ahead and get things started.
Absolutely. Here's our upcoming schedule. Tomorrow, Tom, you're doing a workshop. Larry Pesavento will be with us on Wednesday, and Mr. RRG, Julius de Kempener, will be with us on Thursday. So looks like a pretty great week ahead. Today, after our technical news and headlines, we're going to go over our Monday setups, earnings spotlight with John Hopkins. That's going to be up after that. MWL's company is our first 10 and 10 symbol. And then, as Tom mentioned, I'll be finishing the show with the sentiment update. So stick around for all of that. Tom, technical news and headlines.
All right. There really wasn't anything to talk about in terms of earnings and economic reports. So I'm just going to jump right into the 10-year Treasury yield, and this is a longer-term look at the 10-year Treasury yield. This is a 3-year weekly chart. So you can see we were firmly in an uptrend, but that has changed. We've been downtrending. And if you recall, when I looked at home construction stocks last year, I kept talking about as long as we were trending below that 20-week moving average, respect the downtrend. But once we get back up above it, then maybe we have a game changer. Well, if you look at the 10-year Treasury yield, we're basically doing the same thing. We're continuing to move below that 20, and the low interest rates actually have been helping that group, home construction. But we do have a double bottom in play. I think that now we've got this range firmly established, 260 to the upside, which is now right about where that 20-week moving average is. It's at 258. So if we were to clear this high that's between these two, the two lows that we've seen the last couple of months, if we clear that high, not only would we be confirming this double bottom, but also we'd be clearing that 20-week EMA. So I do think 260 to the upside is going to be a level that we're going to want to continue to watch. To the downside, 235, that's been holding. Does it continue to hold, or does this continuing downtrend take out that support level? We'll have to watch to see. As far as earnings reports, there weren't a whole lot. There is one that's coming up after the bell today, which is NDSN Nordson. And on a relative basis, it's getting close to this price support level back in March. But it's part of that industrial machinery group that was very strong. I mean, we actually saw the group breaking out to a 52-week high on a relative basis. But over the past month, when the market's been selling off, this is one of the groups that has been getting hit very hard. Not as hard as semiconductors, but it has been getting hit pretty hard. And you can see that showing up in the relative weakness there. But Nordson does report after the bell. I just wanted to mention it because this is a group that has been performing poorly. We'll see whether or not it shows up in Nordson's report, or do they hold on to this March low. That'll be something to keep an eye out for later after the bell and into tomorrow's trading. Now, as far as what's going on in the market right now, I thought what I would do is just show you some of the groups that I think continue to perform very well. So if I'm looking for trades, I want to look in areas that are continuing to outperform the S&P 500. One of those areas is restaurants and bars. Here is the DJUSRU, which is the index, the restaurant and bar index, divided by the S&P 500. And if you notice, we had this huge move up in the fourth quarter. So when the market was weak, a lot of that money rotated into restaurants. Then when the market strengthened, we just kind of went along for the ride. And now the market in May has been weak again, and look at what's bleeding and breaking out to the upside. So restaurants and bars, and this is a group that's kind of unusual. I mean, if you're thinking that maybe the economy is going to be weaker ahead, you wouldn't think money would be rotating into a consumer discretionary group like the restaurants and bars. Normally, that kind of discretionary money would be saved in an environment where the economy is weakening. So I'm not quite sure exactly what this says, except that I think it does support the argument that we remain in a secular bull market, and restaurants and bars continuing to perform well. So I wanted to point that one out. I will also point out in the industrial space, the Waste and Disposal Services Group. Check this out. So look at companies like Waste Connections, WCN, Waste Management, WM. These are companies that continue to perform well relative to the S&P 500. I know earlier when I looked at Waste Management, it was up, even though the market was down. So there are areas that you can protect yourself, even with all this volatility in the trade war and all of the negative headlines that are out there. There are still plenty of areas outperforming the overall market. I mentioned the industrial machinery group. This was one of the areas that was outperforming. I'd like to see this trend line hold, and it's maybe just a little bit below it right now. So I really think this is a group needs to turn around pretty quickly. But we do have a series of higher highs, higher relative highs, higher relative lows over the past 6-7 months. So it has been a pretty good group, but we need to see that strengthen here. Another group that's been on fire really much longer than just the last few months. This goes back, I could lengthen this chart out probably 5 years, and we've probably been going up. Yeah, I mean, this has just been a group that's been consistently on fire relative to the S&P 500. So it seems like every time you get a pullback in the group, look for the leaders, and there are plenty of them out there. I know my strong earnings chart list is littered with software companies. These companies continue to produce great results. And as a result, you've got a lot of buyers in that space every time we get a pullback. So software continues to be one of the leaders. I think this is an area we want to continue to watch and trade in. Next up, how about, well, I mentioned defense earlier, so let me pull that up. Defense stocks. I think this is a group that's just beginning a big move to the upside. It had been downtrending for close to a year. And remember, if you look back, this was a group that was leading for quite some time. So I think you look back and you think, well, last year this has been a bad group. I want to stay away from it. But once it starts to show signs of leadership, I think this is a group you want to have representation in. So if you look at it, you can see a relative double bottom in play. And when we came back up, you see this high in between the lows. We have now cleared it and we're pointing up. You can see the PPO, the relative momentum of defense stocks is strong. I think this is an area that you want to be considering. Next up, let's take a look at financial administration. My goodness, this has been a tremendous area of the market. So if we go in and take a look here over the last year, look at the strength here, last 2 years. I mean, until this starts to change, why fight it? This is a beautiful group. It's been performing exceptionally well versus the overall market, and I suspect will continue to do so. How about the specialty finance group, or excuse me, consumer finance group? Look at the move up. Huge relative strength. 2019, this has been maybe the best area in the market. Super performance by this group. And then how about consumer services, which I think is CS. Here we go. DJUSCS relative to the S&P 500. And this one is just sideways consolidating, but off an uptrend. And you can see it making a move. I suspect we're going to break out the new highs. So the specialized consumer services, another area that we want to keep an eye on. So all of these groups, even though the market is weak, there are still plenty of areas to look at for potential trades. And in my mind, these are just some of them. There's some others out there that are performing very well, but these are some of my favorites. Okay, a couple of individual stocks. Let's take a look at this T-Mobile chart. I'm going to go back to a weekly chart last 3 years. A lot of sideways consolidation. I liked it because we were breaking out here earlier in 2019 above this sideways consolidation. And I think today's announcement, or at least the discussion that the head of the FCC is in favor of this deal, I think is just another catalyst to take T-Mobile higher. I really like to look at this chart. Weekly PPO strengthening. Any pullback here, I think, looks very viable. Sprint, looking at the same chart, weekly chart. You can see here the gap up. Now, this one, still got a ways to go to get to the prior highs. I personally like T-Mobile better. Obviously, the Sprint percentage gain today is much stronger, but I actually like the T-Mobile chart better. And a couple of other quick charts. Let's pull up Tesla. I'm going to go back 5 years because Tesla not only failed to get through some overhead resistance back in December of last year. Look at all the tops up around 380, 385. Never made it. Came back down, failed to hold the support area between 250 and 260. So I think at this point, looks like 180 is the next level. Tesla's had multiple tests at 180. If that one fails, you got this one drop down to 140. So 140 and 180, couple levels to watch on Tesla. But the weekly PPO now is very, very weak. Any move back up, you want to watch that 20-week moving average. I would suspect that we will not see a weekly close above that for a while. And then the last one I want to talk about was Boeing. Boeing, for the first time, admitted a software design flaw connected to their 737 MAX planes. And don't need a long-term chart. We just take a look at this one on a shorter-term chart. But Boeing, after getting up and testing that 20-day EMA, is starting to roll back over. That also, that 360 level was what was holding as support, gap support, and price support. So now when you get back up to 360, I was previously talking about a range between 360 and 400 on Boeing. I think now that range is more like 335 and 360. Until we get back through 360, I'd be careful with Boeing. Okay, Erin, upgrades, downgrades, what do you have for this morning?
All righty, let's take a peek. The first one that is upgraded today, and I have to say that chart does not look very good, is Longbow upgraded Louisiana Pacific LPX from a neutral to a buy. And their price target, excuse me, is at $32. So pretty much hoping to challenge that September top. You know, we're in a trading range. I could certainly see it turn back up at the bottom of this range. But if we annotate our support and resistance right here, you can see today and right now we are trading below that low back here in March. So we're kind of a little bit kind of outside of that trading zone, just a bit to the downside. But remember, I mean, we did get this as an upgrade. I don't like the PMO. I'm not really liking the chart too much, but you know, on the upgrade, maybe we will get that move back to the top of the trading range because you can see the EMAs are braided, moving just perfectly sideways. So we could just see some more consolidation sideways from LPX and a possible move to the upside. But caution, that March low is being challenged and could be a bad thing. Nokia Corp was upgraded today from a hold to a buy. As Tom was talking about earlier with T-Mobile and Sprint, find it interesting that we actually got one of their competitors showing up on the upgrades and downgrades. I think what's most important right now is to watch this gap, of course. And the idea is that it will come back up and manage to close that gap. It should if we're on a nice move to the upside and things are still moving and the momentum continues. You can see the PMO turning up in very oversold territory. So there's certainly some opportunity here to at least get up here and challenge that $5.45 range. And since it's currently trading at about a little over $5.08, that would be a pretty tidy profit there on Nokia. But I would be curious to see how this is going to continue given what's going on with their competitors, T-Mobile and Sprint. All right, let's go airlines. I thought it was interesting. It looks like Morgan Stanley decided to get out and look at all of their airline stocks, and they actually upgraded United Continental Holdings. You can see that it is maintaining that support level in the very short term. And you know, it's not a bad thing considering the PMO is on a sell signal and it's now reached negative territory. Price has been able to hold up fairly well, and it is starting to consolidate sideways. You know, I'm not really thrilled with the chart. It's certainly not something I would go buy, even on an upgrade. They did say that their target is going to move from $101 to $110. So they're certainly looking for some great things out of United Airlines. I'm not quite so convinced. All right, let's move to some downgrades. And like I said, we're talking airlines. Morgan Stanley downgraded American Airlines today from an equal weight to an underweight. They moved their target from $40 down to $26. So they're looking for it to break down below even the support we've seen for this year, that low back in January. They're looking for it to drop even further. What I found interesting is that Barclays decided to maintain their overweight. So they're basically on a buy while Morgan Stanley is moving to a sell. So I thought that was pretty interesting. Barclays' target right now remains at $48. So they're really looking for a move to the upside. Certainly two analysts with very different opinions. All right, Delta Airlines is the other one that I'm going to talk about right now. And Delta Airlines, as I said, Morgan Stanley was in there looking at all their airlines. They moved Delta from an overweight to an equal weight. So they seem to be pro-United, feeling pretty much middle of the road on Delta, but not liking American Airlines. So Morgan Stanley overweight to equal, their target went from $62 to $61. So they are looking for a challenge and a breakout from that November high at the end of November. And that's all I have for upgrades and downgrades. Actually, no, I do have one more. Hold on. Deere and Company. How could I forget this one? Deere and Company were downgraded by Vertical Research from a buy to a hold. But interestingly, 1, 2, 3, 4, 5 agencies maintained. And 4 of 5 of them are maintaining on buys and 1 with a hold. And we have targets everywhere from a low of 148. That would be the lowest target, up to $175, well over the top that we saw earlier. This stock is in free fall to the downside. They had some bad earnings information that came out, and they've just been hit really hard. I am really surprised that there are a lot of agencies maintaining buys. All right, now we will close this down. That's it for upgrades and downgrades. That's the ones I went over. There were a couple of interesting ones as well that I did not. So you might want to check those out later.
Yeah, and I think too, Deere was one of those companies that's tied to China and the trade war, so they're being dragged into that as well.
Right. But yeah, the airlines, that was pretty interesting today. Everybody's opinion's very different.
Yep.
Okay, Monday setups. I think today we actually are okay, both of us, going back and looking at what we picked last week. So let's see, I had SO, and I'm going to put that on the screen just a moment here. There we are. All right, so I had SO. It's currently at 53.94. So I picked it back here. Let's see. Yeah, right around in here. So I know we had a pretty good upside move. I'm pretty happy. And honestly, if you did go ahead and get it like I did, I'm still holding. I see a really nice PMO. There's still plenty of room to the upside for the PMO before it gets overbought. So I still like it. And then yours was KSU, I believe.
Yeah, it's Kansas City Southern, a railroad. And yeah, this one did very well. Came down a little bit today, but overall it's had a really good week. I think it was 117 and change or something when we looked at it last week. Now it's 121.64, so it's probably up about 4%.
Yeah.
Past week, and given everything went on in the market, not bad. Pretty good.
Yeah, I would give ourselves pats on the back for this one.
Yep, no doubt.
It's a pretty good week. All right, but now this week, and what do I have for everybody? Let's see. I'm still seeing a lot of, on my scans, I'm still seeing a lot of defensive categories. So if I recall, I ended up with, let's see, well, we can go look at this, viewing all of them in a summary format. I can tell you what sectors I ended up looking at mostly. So I have 2 energy, which has been quite the laggard. But I wanted to put those in there anyway. I thought the charts looked pretty good. You can see the scooters are still pretty good as well. 2 utilities. I actually went with PEG, but we'll look at that one last. So, all right. Pump was on my list, and you can see the PMO is making its way toward a buy signal. We could be forming a little bit of a flag here, and that would mean another upside move about the size of the pole. I think this stock looks pretty good. I'm not really thrilled with that sector, but if the market continues to struggle here a little bit, this might be an area that we see a little bit of improvement. But you can see it did break out above that short-term top, and now it's coming back and it's sitting right on top of it. So to me, you've got the breakout, you're getting the pullback, and now it's time for the move back up, and that would work out well with this PMO buy signal. See, the other one I had is MasterCard. There we are. And this was one I put in the Monday setups. Sort of a similar situation, breakout above short-term resistance, and now it had its pullback. It's actually consolidated that breakout a little bit, and now I would be looking for a move to beat the previous short-term top that we saw back in April. But you can see a really nice rising trend. It hasn't really struggled too much since that December low. So I'm thinking this is a pretty strong company. Obviously, MasterCard, the financial area, and I think we talked about consumer finance or specialty finance recently, but I like this one. I think that MasterCard is a nice setup right now in the financial section there of what we have on my list. Okay, utilities, Ameren. This one I picked, you've got the PMO buy signal. The PMO is still rising nicely. Nice scooter, OBV volume pretty much going along for the ride, getting a breakout from a very short-term flag. So I would expect a move about the size of this pole to the upside. And you can see that that $75 range was broken today. So we're getting a tiny little breakout today. I think that that could be a sign of positive things to come. All right, I picked PEG though. We looked at pump, so let's go down to TRP. And this is again another one in the energy space. I'm actually getting the PMO buy signal. It looks like it might come in today. Notice the move on the OBV to the upside, confirming this move. Could be a little bit of a flag forming here, but the main thing is another short-term breakout and pull back toward that breakout point. So now with that PMO set up nicely with positive momentum, I would look for the breakout in the short term for TC Energy, Ventas, and then I will pass it back to you. We've got the breakout above overhead resistance here. And again, today we're actually seeing that pullback. PMO is still very strong, made it into positive territory. It's now overcome the top that we saw back here in April. So that's really a confirmation to me that things are looking good. So Ventas was one that I was looking at. But the one I ended up picking was a utility, conventional electricity. I like the PMO buy signal. I think the OBV is going in the right direction. But mainly, I really like seeing this trading range that we've been in since really April. And we got the big breakout from that today. We got a little tiny breakout on Friday, but it looks like we're getting the big breakout now. I think my only caution now as I look at this is, we hit that intraday high and now we're trading well below that. So that could be a little bit of an issue, but that's really extra short term. So I'm not going to worry about that too much. I think that the buy signal, everything else looks pretty good here. So I like public service enterprise. What say you, Tom?
All right. Well, I like that one as well for a couple of reasons. Number one, the chart, I think I agree. It looks pretty good. And the dividend certainly helps, although for a 1 week trade might not come into play. But I just think with the market the way it is right now, defense stocks tend to perform better when the market struggles, consolidates. And I'd certainly say that's what we're doing right now. So that makes sense. So I'm going to do something that doesn't make sense and go with one of the more aggressive sectors.
After that intro.
Yep. After I told you what a great job you did picking yours, I'm going to tell you what a horrible job I did picking mine, but I'm going to go with it anyway. I'm going to go with Timken Company, which is in the industrial machinery space. I talked earlier, industrial machineries have taken a little bit of hit over the last month. I think this is setting up as an opportunity for TKR. This one has gotten down testing its 50-day moving average. Let me just get an update, make sure what the price is, because this will be my stock, $46.29. So I'm going to take mine at $46.29. I think that the recent low that we saw in April was right at about this level. I wrote about this one in my blog this morning, and I just think there's a couple levels here. I think the current price where it's sitting is good right there. And then also there was a breakout back at about 44.5. And then even right here, you can see the gap. When we started to make this uptrend, we gapped up on April, the first day of April, and that prior gap support was down here around 43.5. I just think there's a lot of support in here between about 43.5 and 46. So maybe, if this group continues to weaken, maybe we go a little bit lower, but I'm starting to like the reward to risk on this one. I think we're going to move back up eventually to that 52 area. And so as it moves into this support area, I just think the reward to risk starts to improve. So that's a little bit of a shorter term glance at it, but I also want to bring it up on a relative chart because this has been one of the better stocks. I mean, you can see just back at the beginning of the month when this huge volume came in, this was earnings related. It gapped up and it had shot to about an 11-month relative high to the industrial machinery group as a whole. And now, since the overall group has been pulling back, it has given up some of its profits, seen some profit taking. But here you can see that resistance at around 44, 44 and a half that we finally broke through on increasing volume here. I think this was one of the stocks that was starting to lead in this group. And so I think this pullback's an opportunity. One final chart I'll show you on this TKR on the weekly chart. Off of an uptrend, I see an inverse left shoulder, neckline, head, right side of the neckline, and we're pulling back to the 20-week EMA, which I think could be setting a right shoulder. So I think this lines up on a lot of different time frames. I'm going to go ahead and go with the TKR. It was at 46.29. I should have waited 46.18 now, but 46.29 was the price. So I will go with that for next week. We'll see what happens. As far as the other stocks that I have, I wanted to go over Teradyne. Similar to TKR, Teradyne's in the semiconductor space, and I believe is being dragged lower by the overall group because the group has been so weak. So let's take a look at this relative strength chart. Here we had a high up at about $44. We came up here, hesitated at $44, finally broke through, had the gap up with earnings, got up to 50, and now we've worked our way all the way back to 44. And check out these candles. I'm seeing of the last, 10 or 11 candles, probably 8 of them are hollow candles, again, suggesting that the stock maybe is being manipulated down at the open and not necessarily a lot of selling taking place. I think the volume supports that as well. We went up on very heavy volume, been coming down, we're down probably 12% on much lighter volume. But the problem with the stock is not the stock, it's the group. Here you can see semiconductors getting hit hard. Look at Teradyne. It's actually outperforming the semis by a wide margin, breaking out to a 52-week relative high. So if we could ever get a little bit of support on the semis, I think this is a stock that's going to go back up and challenge that earlier high. So Teradyne's another one I like. Couple of others I'll go through here quickly. ATHM, my theme this week is looking in the trash heap because many of these stocks have been hit pretty hard in May. Here's another one. Look at the heavy volume gap up back at the end of March, breaking out above $95. I think this 94, 95 area is pretty important, and we might get a hammer today right at that level. That would be something to consider because the group is not bad. This has actually been a pretty decent group. And the stock was one of the better performers until just recently. So if it can hold this area, maybe it begins to recover and begin to show some more relative strength. But I do like the group. Here's the group relative to the S&P 500, showing a lot of relative strength. Next up is FLNT. This is Fluent, another one that's been beaten up really badly. I was looking at the heavy volume sell-off in March, though, and that turned between 5 and 5 1/4, and that's right where we are right now, moving back into this area. I would just suggest the volume's picked up on this selling. If it does lose $5, especially on a closing basis, I wouldn't make any further excuses for it, but I wouldn't be surprised if we get a reversal on this stock from the $5 level. ARRY. I'm going to talk a little bit about biotechs. I like the biotechs because they like the summertime, not because the chart looks good. I'm waiting for something technically to cue me in on a rally in this group. And if we get it, I think Array is one of the stocks I would watch because the relative strength at the beginning of the year was very strong in the first quarter. And now it's been kind of going with the biotechs to the downside. But it wouldn't take much to break out to a new 52-week relative high on Array. And so with any kind of movement to the upside in the biotechs, I would watch this 20-day moving average. And if you see the volume start to pick back up on this stock, get through the 20-day. If you're more of a risk taker, I like ARRY. Last one I have is EVRI. I talked about the financial administration stocks earlier. Here's one that broke out above this double top last week. Look at the volume trends, very bullish. Here's your financial administration stocks moving up. And EVRI relative to the group just broke out to a 52-week high on its strength last week before the little bit of a pullback. Pullbacks on lighter volume. And as I mentioned earlier, financial administration stocks have just been on fire. So I think EVRI is a good stock within that space. So let's go ahead and take a look at our summary for our Monday setups for this week. Erin is going with PEG. I'm going with TKR, and you can see a summary of the various stocks that we just covered. Okay, let's move on. We're going to move on to the Earnings Spotlight. This Earnings Spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. And Mr. Hopkins, what did you think of that PGA Championship yesterday? Uh-oh. Do we have Mr. Hopkins? I would say we do not have him. Well, what I will do until he reappears, maybe we're having a technical glitch, is I will go ahead and go through the article that John wrote over the weekend. Are you with us, John?
I thought I was.
Oh, there you are. You are with us.
Yeah.
Well,
starting to feel bad.
Before we get into this, I was asking you, what did you think of that PGA Championship yesterday?
Oh, boy. I mean, there's a new dominant player.
Yeah.
Something I didn't realize, I was reading it today, that he didn't have a double bogey during the tournament.
Mm-hmm.
And I forget, there was a lot of double bogeys during the tournament. And apparently as well, I was tied up at that particular time, on the back nine. But reading the reports, with the wind and everything going on, it was much more complex out there than we realized. And that rough is unbelievable. And it takes somebody as strong as Koepka, like Tiger used to be, to get out of that. So I think that he showed that he's the real deal.
Yeah, he's definitely the real deal. Did you know that Brooks Koepka and I had something in common?
No.
I did not double bogey anything this weekend at Bethpage either.
Oh, okay.
But neither one of us had any double bogeys there this weekend, so that's what I have in common with.
Hey, also, did you by any chance watch the Preakness?
I saw the jockey left at the gate.
Yeah, I was thinking, if I'd had any bet on the race, it would have been that horse. The old jockey leaving just before they even get to the field.
Guaranteed. It's like picking a stock and having a pre-announcement of bad earnings coming out. Right?
Hey, speaking of stocks,
yes,
I want to say just real quickly, I've got some stocks to go over here, and of course these stocks because we had an event last night where we laid out a number of stocks that look like they could be potential winners coming forward. And the one thing that all these stocks have in common is that they beat earnings expectations. And this is strictly what we focus on. Are companies that beat earnings, have good-looking charts, and have the potential to move higher. And the first stock I want to start with is Twilio, which is TWLO.
Mm-hmm.
Sure what I'm talking about. It was in my chart, in the chart watchers this weekend. Here's what a double looks like.
Yeah, and I want to just mention to everybody, if you're not already a subscriber to the Chart Watchers newsletter, you really should sign up for it.
Oh, yeah.
There's a list of authors that writes every other week. So every week you get a newsletter, and every other week, the list changes. I think, Erin, you were writing in this past weekend with John, weren't you?
Yes, I was. I did my new favorite scan that I've been running on the show lately. So I talked about that.
Awesome.
Yeah, I mean, the information that you get from the Chart Watchers newsletter is incredible, and it's free. So there's no reason not to sign up. But we'll talk about signing up in just a minute. But yeah, I saw your article over the weekend, John, and Twilio has been just been a monster for quite a while. But go ahead and talk about this.
Yeah, well, every quarter we have what we call our top 10 stock pick webinar, and it's a looking forward, which stocks might be prepared or prepped to move higher. And this was one of them that we keyed in on back in November. Like at the very 19th, 20th of November was when we had the webinar. Mm-hmm. And you can see, it made a really nice move up, came back, retraced and held, and it was off to the races. Mm-hmm. And, the stock doubled. Now, not every stock is going to be like that, but it is amazing if you take a look at stocks a number of stocks even going back to that quarter and what's happened the past couple of quarters. There's been quite a few stocks that have performed quite well. This one was worth highlighting because of, when you can get involved in a stock in November and 5 months later it's doubled. It's something worth pointing out.
Yeah, I think it's definitely important to pick leading stocks and leading industries. Not everyone's going to work out the way Twilio did, but if you put these types of stocks in your portfolio, you are going to get some from time to time that are going to perform like Twilio did. And their stock like this helps to carry your portfolio. You don't need too
Exactly.
many, when you got a double.
Exactly. Now, another stock, two stocks that we actually had out as alerts to our members, Microsoft, I just really like that stock a lot. Mm-hmm. And you see, that it pulled back between 122, 123, just a week or so back. And that's when we got involved in the stock. We had a price target of 130. And I noticed just before it got to 130, I noticed I like to look where options are on options expiration Friday, the third Friday of the month. Mm-hmm. I like to see where stocks are like Microsoft, and they had a massive number of calls up at that 130 level. Mm-hmm. So as the stock got close to 130, we took our profits and got out of it. And sure enough, before the day was out, stock gave it up. But this is a stock I think that really has been a champion. And I think the kind of stock that people will look to when they start feeling more comfortable with the market.
Yeah, I think you raise a really good point too, and it's one that sometimes I ignore and I don't pay attention to nearly enough. But when you've got a stock like Microsoft that's near a key price resistance level to begin with, we already know selling kicked in at 130, and when the stock literally on option expiration Friday is up trading at 130, you have to understand that the open interest out there, most of the open interest is going to be on the long side. In other words, most options traders buy long options, not short options. They don't sell calls, but they buy calls. And as a result, it makes a lot more sense for market makers to use their capital, if necessary, to keep stocks down below a certain level. Now, I don't know how much of this is done, but it's common sense to me. If I know that there are a lot of options at 130 and they're going to expire worthless and they're going to be profit to me, if I can keep the stock price under 130 until Friday's close, then it shouldn't be too shocking when you see this false breakout, this test of resistance and a reversal. So I think you raised a really good point. And I think traders, as you get closer to options expiration, many times you do see this exact thing happen. And it's one of the reasons why I have said for a long, long time. I mean, I've been studying history for many years, and the 19th to the 25th of calendar months tends to be a weak month. And I think a lot of it has to do with the fact that options expire either during that week or just before. And so it behooves market makers to deploy some of their capital on the short side.
Yes.
But I thought that was a great point.
And this is a disproportionate number of calls, by the way. I forget the exact number, but it was a lot. And sometimes, if it's not too many, it's not a big deal. But you've got a stock like, I saw that stock get to 130, almost 130.50, and then proceed to just dump a couple of dollars, like literally within an hour or two. Mm-hmm. So that's why we got out of it. But I still like the stock a lot.
Yeah, I agree. It's in the software space, and it's one of the leaders, so it's hard not to like it.
Another stock that we got involved in is SAIC, Science Applications International. Mm-hmm. The stock has actually held up, pretty darn well. And when it moved back close to its 200-day, we got involved. I had a tight stop. We had a target up near 80, and it got to 79 last week. I like to, when you have a stock and you're up, 6, 7, 8%, and you're within 1%, 1.5% of your price target, you got to start thinking seriously of either raising the stop or taking the profits. We just decided let's take the profits off the table. It's a very volatile market. But I think the stock, considering how the market's behaving, is holding up pretty well.
Yeah, I actually really like this stock. I think the gap up, this was earnings related back here at the end of March, the huge gap up. Essentially, all we did is we went a little bit below gap support, but we essentially held gap support. or if not gap support, we could say this double bottom price support. It held and started to turn back to the upside. And you can see volume starting to pick back up on this move. I think there's a good chance this one goes back to test 80, but I agree, again, especially this week of the month, which typically is down. I think taking profits on some of these stocks makes sense, build up some cash. There will be some more opportunities ahead.
Okay, a couple of stocks, by the way, that were highlighted, as you know, last night in the webinar. Mm-hmm. There were really 3 lists identified that included sort of dividend income producing 10 stocks, 10 stocks that one might consider more aggressive, and then what we call the model portfolio, 10 more stocks. And one stock from each group. The first one is LLL.
Yeah. Now I'm going to pull this up on a relative chart. What John's referring to is I've gone back and joined John for a webinar it was November 19th, February 19th, and then last night was May 19th. So every quarter. And in the past 2 quarters, I've identified off of that strong earnings chart list 10 of my favorite stocks. That's one of the questions I'll get. Well, you got 200 stocks or 250 stocks on this list. You can't trade them all. What are your favorite ones? Well, that was how that whole idea was born, to go ahead and pull out the 10 stocks each quarter that looked the best. But the problem is not everybody is looking for capital appreciation and wants to take the risk that I take. And some actually might want to take more risk. So last night, what we did is during the webinar, 3 different lists were presented. One of the lists was an income producing list. So you're still looking for capital appreciation. You still want strong stocks, but it's bigger companies, large cap companies that have dividend yields. So you're going to be producing income in addition to the capital appreciation. And all of these stocks were in groups that are outperforming or have been outperforming. So LLL, this was a defense stock. I just said earlier when I was talking about some of the areas of the market that I really like. Defense is an area that I would have representation. And when you look at LLL, L3, look at its relative strength to the defense group. It's already out at a 52-week high just a couple of days ago. So if you're going to go with defense, this is certainly a stock to consider because it's one of the leaders. Look how well it's been holding up throughout all this market. Mm-hmm. But the other thing is LLL, L3, has a dividend of 1.56%. And the 10 stocks in the portfolio, all of them yielded at least 1%. They averaged yielding 1.91%. And on top of it, 9 of the 10 stocks had scooter scores over 80. I think 4 of them had over 90. So there was only one stock that was, actually, I'll give you another one, which was ACN, Accenture, has a scooter ranking of 73.5. But those 10 stocks produced an average yield of 1.91%. They are all among leaders within their respective industry groups, and their industry groups are pretty strong. So the whole idea was to put together a portfolio that was maybe a little safer than what we've done in the past. And I think that it's a great looking portfolio for those that are interested in producing income in addition to possible capital appreciation.
Okay, another stock that was on the aggressive list. I think you talked about it during your segment there. TER.
Yeah, TER. Yes, yep. I said that I really like this one, and again, it's part of the aggressive area, not because it's a small company. This is actually Teradyne is a $7.8 billion company. It's not a micro cap or anything like that. And it's it got a nice trend in place. It's making money, but the reason I thought it was aggressive was because semiconductors are getting hit so hard. So, normally when you've got a group that is underperforming the S&P 500, that's not the best place to look for a stock. But I love the volume that came in on this stock and the huge move. This was a stock that went from 40 to 50 in a month. That's a 25% gain. And you can see how it improved relative to the semiconductors and continues to perform very well on a relative basis. So in my opinion, we're in a secular bull market. I think semiconductors are going to bounce back. And when they do, I'm looking for leadership out of Teradyne. So I think this should be considered an aggressive stock.
And then the last stock that was in the model portfolio, the monster, is CMG.
Yeah. Wow. I love CMG. I owned it for a while. I don't own it now. It's up against resistance. It's trying to make a breakout, but look at the restaurant group continuing just to drive higher. Look at it relative to the S&P 500. I showed this chart earlier in the show. And then look at CMG outperforming the S&P, starting to turn up again against its peers. I just think, you got a little bit of profit taking after its earnings report came out, right back up to new highs. I think Chipotle is going to have another good quarter ahead.
Yeah. And listen, I know my time's about up here. I just want to let people know if they are interested in seeing the presentation from last night, they can either go to my article or go to the website, and you'll see right there, top 10 pick webinar. You can click on that, and you can get 30 days of the service plus the recording for $7. So I think it's well worth it. In addition to that, our strong earnings chart list, we don't have time to get into that today, but we have 266 stocks on that list that we update on a regular basis. Anything that goes out to remember trade alerts, things that we talk about in our webinar, all of it, Tom, is focused on companies with strong earnings.
Yeah, and again, earningsbeats.com. If you're interested, you can check this out, earningsbeats.com, and then just click on the top 10 picks webinar. The other thing I'll mention too is if you're interested, back here on the dashboard, there's a user-defined index. I track these portfolios using the user-defined index, and at the beginning of this webinar, I actually went through and showed how I calculate on an Excel spreadsheet the values that I then assign and put into the user-defined index to track it. So you can actually have a chart of the portfolio. Unfortunately, I have it in my other account, so I can't show it to everyone. But I've been tracking that model portfolio since we started it back November 19th. And it's actually performed. It's up over 30%. The S&P 500 over the same period, I think, is up 6%. So 24% percentage points outperformance. So anyhow,
awesome.
if you want to find out how you can use this user-defined index, we've never really talked about it too much here on Market Watchers Live, but that webinar right at the beginning, the first 10 or 15 minutes, will explain it all for you. I thought that also should be mentioned as well.
Great. Listen, thanks for having me on. And, we'll be back in a couple of weeks.
Yep, and we'll hook up and play some golf soon.
Sounds good.
All right. Thanks, John.
Yep.
All right, and there he goes. We did look at a number of stocks, as you can see on your screen there, and it is time now to jump into the 10 in 10. I know Erin has probably got that RRG ready to go.
You know it. I had a little extra time, of course, today. All right, here we go. Lots of them moving in the right direction. A couple of them really not looking too good. I recognize Baidu because that was downgraded today, so I know that chart's not looking too healthy. As far as our requests go, pretty good mix here. Comm services and healthcare lead. So interesting. We'll see how it turns out. But the first one is Moelis and Company, MC.
All right, I was just starting to annotate it so we can take a look here. The big thing on this stock, again, relative strength. It's not in a bad space. In fact, the group has been very strong, as you can see. But if you're going to be in a strong group, do you really want to be in the stock that's lagging it? All of its peers. It's one of the worst performers. So I just don't see anything. I mean, we're all the way back down at the low that we were at back in December, and we're in a group that has gone from 190 up to 280. So almost a 50% move in its group, and yet the stock has gone nowhere. So if you're in a market where your industry group has gone up 45%, and that is not enabling your ownership in the stock to get you any profits, there's no point, in my opinion, holding. I mean, you can see the volume is picked up to the downside. This is just not a stock that's in favor in this particular area. I wish I had something positive to say. The only thing that I would say that might be positive, and again, I don't trade just off of price support, but we are getting close to that December support. Maybe we'll get a bounce there, but what I'd be most interested in is seeing the relative strength start to turn higher, and that is not happening just yet. So I would pass on MC.
All right. The most popular in the chat room is Domo, D-O-M-O.
Yeah, this is a stock that's in the software space. and I still like the stock. I was looking at it over the weekend, and actually when that aggressive portfolio that I was just talking about with John, I wanted to put one software stock in there. And this was one that was kind of on that final list for me because I loved that volume that came in back in March. And I think this stock is consolidating and is going to rip higher again one more time. The volume is just dwindling as we trade in this sideways consolidation. I think when you look at the gap support, after it gapped up, it then came down and it traded just below 35 right here. And check out where we've been holding as we get back down. So I'm still bullish the stock. I know if you're in it with the software stocks continuing to move higher, you've seen some relative weakness, but I think the overall trend here still remains higher. I'm not giving up on this stock just yet. I believe we're going to see a move up to that 45 area and probably in this next quarter. So I'm still bullish, Domo.
All right, let's go with Microsoft. Mr. Softy, I think you guys discussed that, though. I could pick a different one.
That's all right. We'll go ahead and pull it up. I mean, I didn't really pull up the relative chart. So let's go ahead and pull it up. But and this will show you the strength of Microsoft relative to the software group as a whole. 2019 has been a really good year for Microsoft. Huge moves to the upside. We did gap up. That might have been a little bit of an exhaustion gap. Maybe we just need to consolidate for a while here. Actually, I wouldn't even call it an exhaustion gap. Usually exhaustion gaps are, they coincide with volume that usually is the biggest on the chart. So literally it is exhausted. It goes up. Everybody wants to get in. That's the top for a while. I wouldn't exactly say that's what happened. So I think here what I would just be watching is sideways consolidation. I think that the recent low that was established, probably around 123, is an area I'd watch to the upside. You can see multiple tests around 130, and John was talking about that 130 level. I think we just consolidate, and then ultimately I would look for a breakout above 130 on Microsoft.
All right, let's see. The next one up will be, how about EWZ? Brazil ETF.
Yeah, Brazil. I'm still not going to be a big fan. Actually, I don't need the relative chart for this one. I'm not going to be a big fan of too many of these foreign ETFs, mostly because I still believe the dollar goes higher. And so you're not going to get the return with these iShare ETFs that you're going to see in the underlying stocks or indexes that these ETFs are designed to track. Because the ETF is in dollars, you've got a currency part of this trade. And as long as the dollar is strong or strengthening, these iShare ETFs actually get hit to the downside. They actually take a hit from the stronger dollar. So again, I'm not a fan. I think you can already see that this is an ETF that is not too far from that December low. The S&P 500 is nowhere near that. So on a relative basis, I think we're trapped right now. I'm going to say to the upside, we've got that declining 20-day moving average right up here. Also, we broke down below this price support. That's resistance. And then you can see the more intermediate term price support down around 36.5. I'd say 36.5 up to about 39.5 is your current trading range. But I'm not a fan. I mean, maybe we get a bounce, but I would still personally stick to U.S. stocks.
Okay. Next one up, as I said, was downgraded today. Baidu.
Yeah, Baidu, if you look at it on its relative chart versus the internet space, horrible. There's no reason to own it. So here's your internet bouncing. But look, again, this is a stock that continues to underperform. So when you get these big gap downs and breakdowns that we saw in May on this stock, we shouldn't be surprised because the market's been telling us for months that this is not the stock you want to own in this group. Now, the heavy volume breakdowns, it's a falling knife right now. I have no idea where it's going to go and how far it drops. I would simply just say to stay away and annotating it. Again, I know this is redundant. We talk about it all the time, but I think it's so important. Relative strength. If Wall Street doesn't want the stock, you got to sit back and wonder why you want to fight Wall Street. I just think you've got a big breakdown here. Maybe at some point we'll make a rally back to test that 150 area, the area of the breakdown. But I think it's probably a ways off. I just don't like anything here. I'd avoid it.
Okay, let's see. Next one up, DMC Global. Boom, baby.
Yeah, I always like that ticker too. Some of these tickers are pretty funny. Boom. Boom. Well, it continues to perform very well. Nice relative strength here. Now, this one continues to perform very well relative to the industrial machinery group. So you got to like a stock that is going up in a group that is going down. Only because if you like the group, and let's say it holds on to this relative support level in March and starts to turn up, well, if the group starts to get more than its fair share of money, this is a stock that has been already getting its fair share of the industry money. So I'd like the stock going forward. I think Pullback's 20-day moving average is held on multiple occasions over the past few months. So I think if I was annotating here, the thing that's most notable are all of these 20-day tests that hold. Until that changes, I'd be a buyer on the 20-day. So we're seeing some weakness and we're getting close to that 20-day moving average. That's what I'd look for.
All righty. Let's see the next one up. United Health, UNH.
Yeah, UNH actually, I think, was getting pretty close to a buy point. Actually, it is breaking out above the 50. This is what I was looking for on the stock. Now, the volume has been very heavy, and that volume and selling started around the 250 level. So maybe if you want to be a little cautious, wait for that level to be taken out. Maybe you get up to 250, and if we pull back on lighter volume, hold the 20-day, maybe that would be a better time to get in. But I'm starting to see more relative strength in the healthcare providers, as you can see, over the last month. But the market's been weak, so this is part of the healthcare area. You would suspect maybe the strength is just related to the fact that money's rotated a little bit more defensively over the past 30 days. But if we start taking out some key levels, I think the first one actually was this move up, little flag, and then today's breakout. I'd like to see a little bit more volume to confirm that. But I think this is a good first step to repairing the chart here on United Health. So I'm going to just draw a line there. We had a nice little bit of support here in March, came back up, failed to get through. Now we're getting through. But I think where all of this volume really poured in mid-April came from about that 250 area. So maybe we're trapped here between 240 and 250 for a bit. But let's see which way it breaks out of this trading range.
All right, next up, this was actually a Monday setup of mine, I think 2 weeks ago. First Energy, FE.
All right, continues to perform very well. Nice group. Group's performing well. The stock relative to the group is performing well. Yeah, and the overall industry group relative to the S&P is hanging in there fine. So I don't see anything bad here, and especially with the market being volatile, being into the summer months, I think, I wouldn't have my account loaded with defensive stocks. But if you want to hedge a little, this is the type of stock I would do it with. I think First Energy looks really good. It continues to hold on to its rising 20-day moving average. You can see since breaking out back here above these highs, check out these pullbacks right on the 20-day. We bounce right off of it. I think FE looks good.
All right. Next one up will be SAH, and that is Sonic Automotive.
All right. Part of the problem with some of these automotive stocks, I think, is still the threat of a possible tariff on auto parts. I don't know. It doesn't seem like anyone is really getting behind this group over the past couple of weeks, but we did have a huge move up prior to that. I just think you've got to watch this gap support on the stock. It has been one of the better stocks, but it has also struggled in terms of its relative support. Not quite breaking below that January low, but you can see we've definitely, over the last 4 weeks, been trending lower. I would watch this relative support level, and then I would watch this gap support right in here. I think that is going to be a combination worth noting. As long as we can find buyers in this area and we don't lose the overall relative support of the group versus the S&P, this is specialty retailers, then I would be okay with Sonic Automotive. If we lose the gap support and you see the relative strength of the group break down below the January low, then I would be out. So mixed picture here. I'm okay with it so far, but this is one I'd certainly keep an eye on.
Okay. And the last one is going to be MetLife, M-E-T, Met.
Yeah, I like MetLife. I think, first of all, the life insurance group, getting close to the high it had back in September. It's been doing better. And the thing that I probably like the best is that we're really close to the 10-year Treasury yield support at 2.35%. If you look at life insurance companies, there is a very strong positive correlation between the direction of or the relative strength of life insurance versus the S&P 500 and the direction of the 10-year Treasury yield. So if the Treasury yield bounces off 235 and starts moving up, I would suspect that we are going to continue to see a rally in life insurance relative to the S&P 500. But MetLife has been a leader in the space. I like the fact that we struggled between 45 and 46, and we finally got there. And look at all these hollow candles. A number of these hollow candles are red, meaning that we had gap downs and we still finished lower for the day, but we finished above the open. So we've got the hollow candle, but it's red because we were down for the day. I still find this to be very bullish. I think there's accumulation taking place on MetLife. So as far as the annotations go, I would just say, we've had a lot of resistance show up between this 45 and 46 area over the last 6-7 months. Finally broken out above it, trending over the 20-day. I like it. I think this is a good one.
All right. And that does complete the 10 in 10. Here are the symbols that Tom just annotated. If you would like a copy of those annotated charts, just go to the Articles Blogs tab, click on the Market Watchers Live blog, and you'll find the link to those charts right there at the top. All right, time for our final market update. But before I do that, I just wanted to give everybody a heads up because we are ending our sale today on ACP and our new spring special where you can get that preview. If you renew your subscription for 12 months, you're going to get 2 free. In 6 months, you'll get 1 free. But today is it. Today is it. You better go do it now. All right, but what is going on in the market? Here we go. All right, the Dow Industrials are lower today, down almost 94 points currently. And as you can see, we also are seeing the S&P, the other markets following alongside. NASDAQ gap down, but moving mostly sideways. New York Stock Exchange down slightly, down almost 32 points right now for the NYSE. Russell 2000 hit the low for the day, does appear to be taking back some losses and maybe will make its way back into positive territory. TSX is really consolidating sideways today, but down a 0.25% currently. TNX Treasury yields are rising, currently reading 2.41%. VIX is rising, but we are looking at a number at 16.49. We did see it reach above 17.5, but we can see that the VIX is moving back, so we're seeing a little more comfort out there. UUP down just over 1 cent. Moving sideways. Gold, same thing with GLD moving sideways, but down. And then we have USO, which hit an intraday high so far and took about pretty much all those gains, but it is still up 2 cents, reading 13.10. TLT is down 17 cents at 125.82. Sector summary. Right now, the financial sector is leading, followed by utilities and energy. So that's probably why some of my scans came up with a lot of utilities and energy stocks. Currently, though, comm services is the one that's taking the biggest hit, down 1.6%. That's all I have for the final market update. I'm going to pass it to you.
All right. Yeah, I just wanted to go through and look at the mobile telecommunications index chart. I talked about Sprint and T-Mobile earlier in the show, and the fact that we do have, an FCC, at least the head of the SEC, has said he's in favor of T-Mobile's $26 billion acquisition of Sprint. I wanted to bring up the chart of the mobile telecommunications group because we have an uptrend, and we have now about a 6 or 7 month ascending triangle. We went up and tested it again today, up at the high. This is about as good as a pattern looks. We got the A, B, C, D, E pattern. The E would actually be the breakout. And if we actually break out 400 down to 345 or so, 340, I mean, we could be looking at a 450 to 460 target on this particular index. And that would really add to the bullishness I was talking about earlier with T-Mobile. So mobile telecommunications, one of the stronger areas today, but just keep an eye on this chart because a breakout above 400 down the road, whether it's later today or maybe later this week or next month, whenever it occurs, I think that would bode very bullishly for stocks like T-Mobile. Keep that in mind. All right, back to you, Erin, for sentiment.
Yes, it is time for sentiment. So let's go ahead and get started. All right, so this is your DecisionPoint Sentiment Update for May 20th, 2019. Let's take a look at what has been going on. We like to follow sentiment because sentiment can sometimes give you an idea of where the market's going. For example, we follow the VIX regularly, and we can look at how people are feeling about the market somewhat by utilizing the VIX. And so we like to look at those kinds of sentiment indicators. When people are very scared, that's actually bullish for the market, and vice versa. So what is going on currently with the sentiment update? Well, like I said, I'm going to go through a couple of charts. I just wanted to give you an idea of what some of these acronyms mean. The American Association of Individual Investors, AAII.org, has a website where you can take a poll, and we're going to be looking at those poll results. The National Association of Active Investment Managers, or NAME, will be looking at how exposed active investment managers are to the market. I will show you the RIDEX ratio, the decision point indicator. Wall Street Sentiment Survey, Mark Young follows this, and it is about market timers telling him what they think about the market. And the VIX, which I just mentioned, we'll look at that. And then I'll finish off with some gold sentiments. All right, but let's go ahead and get to those charts. I'm starting off with the put-call ratio chart. And I know, Tom, you've been paying a lot more attention to the equity put-call ratio lately. And one of the reasons is we're starting to see very extreme readings. And that's something to pay attention to, because when we get these readings stretched out and very oversold, that is usually when you're going to see those market reversal points, those pivot points. So watching this closely, we've now dropped below pretty much the normal range for a bull market. Here's your range. That's a pretty steady bull market, right? The oscillation tends to be right in this particular area right here. And you can see right now, we didn't get to the top of that range, and we are now below that range. So not configured for a bull market, not surprisingly, after we're seeing the price deterioration that we have in May. And, there's still, these ratios are still just diving lower. The good news is the more stretched out and more oversold this indicator gets, the more likely we're going to start seeing that, we'll see that reversal. Not seeing it right now. I would say that, we're getting toward a bullish phase here with the sentiment on these ratios. We're moving there. We need the bottom, but currently we're still moving lower. So in the shorter term, I'm still looking for lower prices. But if we get that turn in oversold territory, that's what we want to see. That's going to give us that opportunity for that price rally. All right, AAII. And I haven't made this chart quite big yet, but I think that it's pretty obvious, the interesting reading on this chart, and that would be the increase, a big increase in bearish responses to the AAII poll by individual investors. Now, the ratio could be lower. On the high side, right, I like to look at 2, where you have twice as many bulls as you have bears. To the downside, I like to see readings below 0.5 for the same reason. I want to see twice as many bears as I do bulls. And we're very close to that kind of a reading. We're seeing very low readings, and typically they do tend to precede market moves to the upside. But it can persist. You can continue to get these high readings and still have to endure a little bit more downside. At this point, I think that very high ratio of that high amount of bears right now, almost 40%. I think this does speak well for the market in the short to intermediate term. All right, next up, name exposure. All right. So this chart, not quite as exciting. You can see we've had quite elevated readings. The exposure level was pretty high going into this rally. We got a pullback last week on this move to the downside, and now we're seeing an even larger decrease in the exposure as prices continue to move lower. I like this in that when the exposure level starts to drop or get lower, that's usually your point of entry into a new rally. Again, sentiment is contrarian, so the more bearish our active investment managers are, the less exposed they are to the market. That gives you a sense of how they're getting more nervous, possibly. So when we see that exposure moving lower and it gets more and more bearish, that's actually bullish for the market. So right now, the exposure is being pulled back. That's good for the market, but it could be pulled back quite a bit further, as we've seen. So I'm not so sure this is where we've hit the extreme reading here, but it is bullish for the market that we're starting to finally see that exposure being rolled back by those active investment managers. Wall Street Sentiment Survey. And as noted here, if you go to wallstreetsentiment.com, that is Mark Young's site. He's been on our show, I think, once or twice. And you can find information on how to get the sentiment numbers from him and learn more about the pool of market timers that he uses for his poll. Carl and I are both members of the poll, so we give our thoughts for the following week as well. Now, right now, notice that 60% of the market timers polled are bearish going into the week. A lot of times we're right, but typically it's sentiment. And if we get too many bears, that's going to be bullish for the market. This is too many bears, in my opinion. So I am looking at this week in a more positive light based on the fact that we have so many market timers that are very, very bearish. A third, though, however, are bullish. And that's why we're getting that reading that's still slightly above 0.5. It's a pretty low ranking, though, or ratio right now. If you go, and I did put the height right here so you can check and move across. It is a low reading, and we have quite a bit that are higher than that reading. But again, I like to see even a little bit more of a disparity, but this is pretty, we're seeing some pretty climactic readings here. That's a climactic reading, in my opinion. How many times have we reached that or above it in the past year? Not too many times. And typically, when we see people get extraordinarily bearish, that's when you start to see those moves to the upside. In this case, market timers were right, and it did come back down, so it's not always there. But at this point right here, you can see it was right before a nice big move to the upside. So it's not foolproof, but it does give us an idea of the bias of the market, or at least the bias of the participants in the market. And knowing that does help with figuring out price movement and where you think it might be going. All right, Ridex Asset Analysis. This is a group of funds that we track. It was originally Ridex, but now managed by Guggenheim. But the main idea here is it's a static group of funds and the money market, and they report to us the assets in each of those bear funds, each of the bull and sector funds, and then they also report the assets in their money market funds. And so this is a really great way to get put your finger on the pulse of the market, because it's not a poll. It's not somebody check marking a box. This is what they're actually doing with their money. So I think that this indicator, sentiment indicator, is more important than AAII and some of those others, even the Wall Street Sentiment Survey that I'm a part of. So what are we seeing right now in the Ridex ratio? Well, first of all, it's moving down to the bottom of the range. Again, the scale is inverted. I look at these as oversold readings when you get them moving higher and higher. Notice what we're seeing right now is an increase in the bear funds, and you can see this is the weekly reading. So it went from all the way down here around 120 and has moved up quite a bit above that 140 level. We're seeing a huge increase in the money market assets, and we're still seeing a decrease in money going into these bull and sector funds. So this is telling me, now last week we had the money market funds were starting to increase, but we were losing ground on the bear funds and the bull funds. So we were looking at scared money. Now we're looking at a little bit more assertive or aggressive money, because we're starting to see some of that move also into those short funds. And so when I see this, we're seeing a lot of bearish sentiment because of this. And you can see, again, people pulling out of those equity funds. And so to me, that is telling us that sentiment is very bearish right now. And that is bullish for the market. All right, I do show my climactic indicators of advances minus declines. I look at the new highs, new lows. At this point, we really don't have any climactic readings going on, so I'm not really, I don't really see this as initiation or exhaustion. We're just sitting in neutral, and even the VIX is sitting right in the middle of the Bollinger Bands in neutral. All right, let's go ahead and look at gold. We're going to look at the gold sentiment, and I want to do it on this chart. There we go. All right. So I have marked a head and shoulders that many market timers and analysts have been looking at as far as gold. Looked like we had the execution. We got the failure, started to make our way back, actually broke out to the upside. Looked like we were going to execute a falling wedge. But we saw gold just really get hit in a big way. Looks like we might be stopping. We've maybe staunched the bleeding here for gold, but I don't like seeing, not only did it not finish executing the bullish pattern, but it's now come back down and really looks like it wants to execute that head and shoulders again. I have been bullish on gold. And, given this top under the PMO, the picture was a lot different last week. And, at the end of the week, we just really saw it make a big time drop. The sentiment, though, is not too bad. I mean, we're seeing a lot of bearish sentiment, and that's because these discounts are listing as very high for the Sprott Physical Gold Trust. It's a close-ended fund, but the price does fluctuate. So you can compare what the assets are in the trust, and then make a comparison as to what they're currently worth versus what people are paying for that fund. And so that's how we determine our discounts and premiums. And when we're trading at a discount, that means there's not a lot of interest in gold, and they're able to get in at that lower price on the fund. So, bearish sentiment is generally a good thing. We usually come out of extreme bearish sentiment into an upside move. Looked like we were getting it, starting to pull back. On an optimistic side, I think you could make a case for price dropping down here to the bottom of the wedge and then making its way up to execute it. I don't want to make excuses for this pattern. So I would be looking back more into the bearish category with this head and shoulders. I don't know that I would go and do the calculation off of it. But I think that because we had this bullish formation and it failed to execute, I'm a little less bullish here, and especially since it dropped so quickly below that, what should have been fairly strong support at 121 for GLD. All right, that is pretty much it as far as my charts for sentiment, but let's go ahead and go through the summary so we can get a feel for what all of these indicators are telling us. So 10-day moving average of the put call ratio, I'm saying neutral to bullish. It still could continue to fall fast, and that would be bearish. So you could look at that as a bullish sentiment for the market, but I'm moving neutral because we really haven't gotten that oversold low on the 10-day moving average of the put call ratio. So when I start to see the bottom and that move to the upside, then I'll cross out the neutral and I'll be bullish. All right, AAII, big time increase in the bears. So I would say that's bullish for the market. Name exposure has been lowered, and I would say that's bullish for the market as well. But I added that neutral caveat because the exposure has been lowered, but it's not really in a climactic or extreme low. So I think that it could continue lower, that exposure. So I'm going with the neutral to bullish for the market. Wall Street sentiment, climactic increase in bears, 60% went bearish. And so that really is bullish for the week because sentiment being contrarian. And let's also look at the RIDEX ratio. The money flow into those bear and money market funds is really pushing forward, and that would be bullish for the market. The breadth and VIX, really nothing climactic, sadly, not really telling us anything right now. And as far as gold, I'm looking at that bullish falling wedge. I'm looking at those high discounts. But we have that big time price breakdown in the top below the zero line. So I'm going to lean more bearish on gold right now because I think it needs to test the bottom of that wedge, even for that bullish outcome. I'm looking for a test to the bottom of that wedge, and then we can go back up and try once again to break out to the upside with gold. But for now, in the shorter term, I am looking bearish. That's all I have for the sentiment report. Time to wrap this show up. Probably look at that poll, huh, Tom?
Yeah, let's see what everybody went with. MasterCard.
That was one of mine.
Yeah, not surprising. That's been a great company. Actually, it's on my strong earnings chart list and certainly been a great performer. I was actually thinking about putting that into my model portfolio. I didn't make it, but it was right at the final cut. Great company. So CMG, another one. That certainly looks to me like it's ready to make a breakout. May get it today.
Yes. I think those next two, the 20%ers, are those the producer category?
Yep, they came up with some good ones.
Yeah.
CMG looks really good to me.
So yeah, PEG, that was my pick. You did TKR, didn't you?
Yep.
So our picks are in the last place. I find that interesting.
Yep, TER and TKR.
Well,
I did want to show a longer term chart here of the NASDAQ real quick because this is a weekly chart. And going back to 2013, when you get into these uptrends and the PPO is rising on the weekly chart, these 20-week moving averages tend to hold. Just want to point out we're sitting right on the 20-week moving average right now or just above it. So not a whole lot of room to the downside. This is an area where normally we would see the bulls come through and pick us up. But this week is going to be an interesting one for a number of different reasons. Tomorrow I'll be doing my workshop though, so stick around. I have no idea what I'll do it on, but I'll find something.
I'm sure you'll find something to inspire you.
No doubt. All right, I want to thank all of you for being with us today. Please remember to complete the survey as you exit. It's located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and hopefully we will see you back in here tomorrow. Happy trading, everybody.